Well, folks, it was a big boy buy day out there here today. Yeah, I was putting some pretty big money into the market. And so we'll talk about what I was buying here today, why I was buying it right at the top of this video. From there, I want to go ahead and react to this. I posted this on my X page, formerly known as Twitter today, which, by the way, if you ever want to follow me on X, you can look in the description area of this video. I always have it linked in the description. But I made this post here today showing you what the 2024 S&P 500 year-end price targets were versus where the S&P 500 ended the year, okay? And I think that's going to be a very interesting one to talk about in this video here today. From there, we're going to react to two videos around Nike. Obviously, Nike is the one that's in the news right now. And so a lot of, different viewpoints on what's going on with Nike. Is this a bottoming of the business, kitchen sink quarter they did? Do we have further to go? All that sort of stuff. So we'll really discuss Nike and kind of react to those videos here today. By the way, action-packed times, man. It stays busy. Earnings season is about to wind down, so it's going to chill out over the next, I would say, it's going to start chilling out next week and for the next couple weeks. But then obviously we have the April 2nd situation with the tariffs. So, it'll pick back up again, but it's just been busy, man. Appreciate y'all joining me. All I need from you guys, one thing only, smash that thumbs up button on this video. And if you want to subscribe to the channel, you can certainly subscribe. We are now, how many subscribers do we have on the channel? 85,000 and plus. So appreciate y'all for being here. And my hair does as well. Look at my hair. It's coming back to life. If you're looking to apply to our private stock group, private wealth group, get access to that next week. Pin comment down there, click on that, fill out a form, see if we can get you access next week, okay? Now, before we start going through these buys, I need to address a comment I saw, right? Because I see comments like this sometimes from folks that maybe are newer to the market. They don't understand this game. They say, what happens when you run out of money? Those sorts of things, right? For 15 of the past 16 years, I've never ran out of money. As long as I've always had more income than expenses. The only year I didn't have more income than expenses was essentially when I took a year off and retired for a year, okay? And I enjoyed my firstborn son's first year of life. And so I had no income during that particular year, and obviously living on this earth, you still have plenty of expenses, right? And I lived in a 3-bedroom apartment at that time with my wife and, my first son. And so, outside of that, I've always had more income than expenses. And every single person watching this video right now, you should always have more income than expenses. If you don't have more income than expenses, don't watch this video. You need to go get on that. That's what's way more important for you. So you should never run out of money. You should be ready to buy every week, every other week, at least every month. As long as you got more income than expenses, you're ready to always buy. And that then sets you up in a position of power. You don't fear corrections in the market. You don't fear crashes in the market. You gladly welcome them. And you also have to understand, where does the stock market go long term? Up. Short term, anything can happen. The next month, the next year, who knows? Who cares? It's all about long term. Your pie's going to grow a lot bigger than where it's at right now. That's all that matters in the end. Whether the market downtrends for the next 2 years or the next 2 months or the next 2 days, it means nothing to me. I don't need this money to go buy stuff with tomorrow. And no one should that's investing in the stock market. You're playing a long-term game. You're worried about the next 10, 20, 30 years. That's what you're worried about, right? Not the next 10, 20, 30 days. That's a real investor. Outside of that, you're just a speculator, gambler, right? And so everybody, I think 90% plus of my audience, you guys get it. You love this game. You love the corrections and the crashes. You're ready to buy. You have more income than expenses. But for that, let's call it 5% or 10% of people that are new to the market. They don't understand long-term concepts, long-term investing. They don't get it yet, right? I'm explaining it to you. I'm putting you on game here, okay? Stock market long-term goes up and up and up. It's not an opinion, that's facts. Short term, anything can happen, and who cares? It's just a better buying opportunity for you, right? Do you not like sales? If you don't like sales and you're so far gone mentally when it comes to money, you have no chance. Holy smokes. If you don't understand the concept of sales are awesome, I don't know what to tell you. Oh my gosh, okay? So that it needs to be said, right? You never run out of money. As long as you got more income than expenses, you're always ready to buy. And then it's ready to go. Rock and roll, baby, okay? Alrighty, so first up, a big buy here today was a Nike stock. That's a $20,000+ buy. And by the way, I was buying in my Patreon portfolio today. I was buying in the private group, the private stock groups, obviously portfolio as well. So the public account, so buying across the board, but those are always buys. These buys I'm showing you here, these are like freak buys. So these are like me saying like some stocks are at some silly prices and I got to put some big dog money into it. So Nike, bought 300 shares there. That was a little over a $20,000 buy. Next stock up here I bought here today is Elf Beauty. This, folks, is a big dog buy. I bought 667 shares of Elf at $62 and some change. It's a $42,000 buy. This buy with Elf today is me kind of calling a bottom here. Could we go down to $55 or something? Yeah, it's always possible. But the moral of the story is I don't feel like we have that much more downside in regards to Elf. And so that's why I do a big boy buy like this here today, right? And if I'm off a few dollars, like if Elf went to 55 or 57, so be it. The moral of the story is, in regards to Elf, I'm much more scared about not buying this at 62, and then it goes to 200 plus over the next 3 to 5 years. And I'm stuck here looking, and I'm like, why did I not do that big buy I was thinking about doing at 62? Just because I thought I might get it at 57 or 59 or 55. Like, who cares? Like, the moral of the story is, if I'm right on Elf, and this is going to become a $200 plus stock again, right? Like at 62, give me the money. Like, because then that $40,000, right, ends up becoming, we can call it $120,000, $130,000, $140,000 over the next few years. So, pretty good ROI opportunity there. Next buy I went ahead and made here today is AMD. 111 shares of AMD I bought here today. Paid $106 for that. About a $12,000 buy. Now, let me be real crystal clear about these stocks like AMD, like Nike, like Elf, like Estee Lauder. A lot of these stocks I've been buying heavy for the past, we can call it 3 to 6 months. I'm in the last inning of buying these stocks. This is the last inning, meaning I'm going to wrap up my buys on these stocks likely over the next few weeks, okay? I've been adding these stocks aggressively. I've built great positions in all of them. Celsius fits that category, right? And I'm pretty much about wrapped up here. And so I'm already starting to look at many companies that is the next group of stocks I'm going to be buying. And so this is the way I do this game. I see a very attractive opportunity. I start investing into it. If we happen to go through a correction at the time, then the stock starts going down, and I get to build my position much more quickly than I might have otherwise, and much more substantial than I might have otherwise, right? Because let's say I had invested in AMD stock, and I was buying a lot of shares at 120. But then instead of it going down to 106 or to $100, let's say instead AMD went to 140, 160, 180. I'm just going to be honest with you guys. I would not have built this AMD position that big if it went to 180. However, I went to 100. Now I'm so much more incentivized to buy more shares and more shares and more shares, right? So the moral of the story is I bought a lot of Nike shares now, a lot of AMD, a lot of Celsius, a lot of Elf here recently, Estee Lauder, those sorts of stocks, this last group of stocks. And so I'm in the last inning of buying them. We're almost concluding. And then those stocks will just be a hold for the next few years. And, if everything plays out the way I think they're going to play out in these stocks, I'm going to make a lot of money. And there we go again, right? And the next batch of big winners come through. So, and it doesn't always mean every single stock's going to go up that I invest in, right? Sometimes I'm wrong. Sometimes there'll be ones that just don't work out. And I was like, dang, man, I missed it there. And that's fine. And, for any of you newbies in the market, you got to understand that's the cost of doing business. The cost of doing business is sometimes you're going to be wrong. And you have to be okay with that. You have to be okay with failing sometimes. If you can't deal with, failing sometimes, you can't deal with the big house. You can't deal with the big, the nice cars. You can't deal with the nice vacations. In order to get to all that stuff, you got to fail. I don't know anybody that ever got wealthy in this life and didn't have a lot of failure along the road, where they messed up, they did things wrong, they made bad investments, they made bad businesses. I don't know one person, and I know a lot of wealthy people nowadays, including myself. I've made plenty of mistakes, I got plenty of stocks wrong, but the moral of the story was over the past 16 years, We got a whole lot more right? And that's all that matters. And that allows you to then go on and prosper, right? And reach levels that you never thought was possible, reach financial goals that you never thought was possible, or, let's call it achieve whatever you did think was possible and achieve your dreams. But you have to get over this fear of being wrong. That happens. And somebody thinks it's oh, I'm going to get under Jeremy's skin because he was wrong in that one stock. I don't care. It's the cost of doing business. And I'm going to be wrong about other stocks, right? There might be a stock in this latest batch I was buying that maybe it doesn't work out. I look back, I'm like, dang, man, got that one wrong. That's fine. In the next batch of stocks I bought, hopefully they all work out, but there might be one or two that don't work out. And that's fine. It's the cost of doing business with being an individual stock investor. The math works. As long as you're a lot more right than wrong, and on your big investments, you're right. Oh my gosh. And then when you take risk in, let's say, some riskier stocks, right, you got to keep allocation smaller. Because let's think about it. If you got some company that you're investing into and it's like this company's either doomed for bankruptcy or it's going to be a 10x type opportunity, right? If you keep position sizing small, well, if things don't work out there and it goes to zero or something close to that, right? Well, you lose a smaller amount of money. However, if it's really that 10x opportunity you thought it was, and it turns out to be that, a very small amount of money becomes a very large amount of money very quickly. Palantir would be a great example of that, right? We're up 1,000% plus on Palantir stock. It has been a tremendous gainer for us, and we've been able to take ridiculous, hundreds of thousands of dollars of profits in that stock, right? Tesla, I think I took, Tesla's probably in the millions, right, of profits. And for Palantir and Tesla, those are good examples of I took smaller position sizing because I understood there was a lot of risk back in the day when I was investing in Tesla, as there was still a lot of risk in Palantir when I was investing in that very heavily in 2022. But I took a smaller amount of risk and it paid off ridiculously well compared to my portfolio size. I didn't risk the farm, and so I didn't lose the farm, right? And so that's another component you got to kind of keep in mind there, right? Just trying to give some game out there. Another buy I made here today, 150 shares of SoFi, $12.75. SoFi is a really good example of a stock that if you want to talk about a stock that has, 10x, 50x opportunity long term, SoFi is a great example of that. But it comes with risk. You don't see me risking the farm in SoFi, do you? No. But I'm adding the stock here and there, right? Did around a $2,000 buy here today in that one. I got a decent sized position. I got 3,700 shares in the public account, which is a very modest position considering the size of the public account. That's a portfolio that's close to $3 million. And so 3,700 shares of SoFi is not a large amount. So you don't see me risking the farm in SoFi because it comes with risk. At the end of the day, it's somewhat of a financial institution, right? Obviously, they got their fintech side of the business, but they do take loan risk on certain products. And you never know what happens if a big recession and people don't pay it back. What happens to SoFi? Would they have to sell to somebody in that sort of environment? Could they go under? Anthony Noto seems like a type of CEO that's not going to have that happen, but there's always that risk, right? Always that risk. And by the way, that's a risk in regards to almost all financial institutions. And so my view is if SoFi is that 10x, 50x opportunity, right, over the next 10, 15 years, oh my gosh, a small amount of money is going to become a ridiculously large amount of money. And at the same time, I'm not going to risk the farm in that stock in case I'm wrong and they fail along the road. And then I'm stuck in a situation where I'm like, oh my gosh, why did I put $1 million in SoFi? I'd much rather always look back, especially if it's a riskier stock that I'm buying at that particular time, right? That comes with a higher level of risk, right? I'd rather look back and say, why didn't I invest more? I wish I would have put even more in that stock, rather than I look back and I say, why did I put that much? That was so silly. That stock was way too risky. I took way too much risk. I'd just much rather be on the other side and say, I wish I put even more in it, right? So some things to kind of keep in mind there. By the way, look at the new 5-Figure Club award we have in the Patreon, baby. I think I showed this off only in one video so far. This is our new one. So when you hit 5 figures plus, and if you're part of the Patreon, we send you that baby over. And then obviously we got the 6-figure and 7-figure awards that we send out to the private stock group members. But yeah, I'm really excited about that 5 figures. And that's a big step, man. Reaching 5 figures in your portfolio is a big step. You got to understand, a very small amount of the population even has 5 figures in stocks. Like a very small, like if you look at the world, how big the world is, 8 billion people or whatever, and you think, how many of those 8 billion people have more than $10,000 in the stock market? Is a very small amount, sadly enough. Very small amount. And so when you achieve that, it's big, right? And then when you get to 6 figures plus, now we're really talking big. And then when we get to 7 figures plus, dude, how much of the world's population has $1 million plus in stocks? I don't even think it would be 1%. Like literally, I don't even think it would be 1%. No, I don't even know if it would be 0.1%. Like when you think about the world's population, how many have $1 million plus in just stocks? There's no way it's even 1% of the world. It might be like 0.1% or 0.5%. Like you're, and then if you talk about multi-millions, oh my gosh, dude, that's insane to think about, right? So anyways, just some food for thought in regards to that. Alrighty, next up here, before we react to some Nike videos. So this I posted. I'm glad I had a screenshot of this on my desktop. It says S&P 500 year-end price targets for 2024. These predictions were done by the most prestigious Wall Street firms in December 2023. The S&P 500 ended 2024 at 5,900 range, right? 5,900. Keep that in mind. Goldman Sachs, back in that December timeframe, their 2024 S&P 500 year-end price target was 4,700. Wells Fargo was 4,625. Barclays and Morgan Stanley were at 4,500, and JP Morgan was at, I'm sad I do business with JP Morgan, seeing how wrong they were. They were at 4,200. And once again, the market ended around 5,900. So I said, do you still think Wall Street's smart money? Because a lot of times people think like, they try to fluff up. Even I see this from retail folks. Oh, you think you know more than Wall Street? Yes, I do know more than Wall Street. 100%. I've been in this game 16 years. Wall Street, I can tell you, is some of the dumbest money you will ever find. People try to cast retail as dumb money. I'm like, the dumbest money I've seen in the stock market over my 16 years of being in this game is Wall Street. These guys are clueless, completely clueless. And when everybody's feeling bearish, they all go bearish, right? And still, even if you look at the end of 2023, people are still feeling bearish and still feeling like recession. When I say people, I'm talking Wall Street firms. And that's why they put out all those crap price targets that were off by a mile. And not only that, the previous year was even worse. If you would have saw the year-end 2023 price targets from the Wall Street firms, I wish I would have screenshot those back in the day. At the end of 2022, trash. They were all so bearish on the stock market. And 2023 ended up being a great year. And they went into 2024 also being pretty dang bearish. And man, were they wrong, right? And so actually this year got me a little more concerned about where the market was going, because a lot more Wall Street firms were very bullish going into this year. And so I said, dang, man, like they're getting more bullish. And so you saw me lighten up a lot of my buys going into this year and at the beginning of this year, right? Because I looked at it, I'm like, oh man, a lot of these Wall Street firms are going, really bullish now. And so usually you're at the later stages of a market rally. And sure enough, what do we have right after that? Correction in the market, right? Which opens up a lot of great opportunities, which I'm happy for. But you got to understand, like, the dumbest money in the market is Wall Street. They're a bunch of sheep. They follow each other around. When everybody's bullish, they all go bullish. When everybody goes bearish, they all go bearish, right? Retail, sophisticated retail, I'm talking people that have been in the market many years, some of the smartest money you will ever find in your life. I'm talking more intelligent than the far majority of hedge fund managers. No lie. Hedge fund managers don't even have to be intelligent in regards to the market. All they got to be all they got to be is great salesmen, right? And sell people that, high net worth individuals that have, $50 million plus net worths that, they're going to keep their money safe. That's all they got to do. Be good salesmen. They don't have to be intelligent at running money, right? And that's why you look at many of these hedge funds, they get tore up by the market, right? They a lot of them underperform the market when it's going down and underperform when it's going up. It's like, what good are you if you're doing that? Like, it's insane, right? But a lot of the most intelligent money you will ever meet in terms of actually understanding the dynamics in the market, actually understanding stocks, where opportunities are, is retail investors that have been in the market many, many years. Because you know why? Retail investors don't have the ability to go and just invest a bunch of other people's money. Retail, look at myself. Whose money am I investing? My money. I don't invest money for anybody else other than myself. I don't even invest my wife's money. I don't even invest her money. She can invest her own money. Do whatever you want. I invest for one person. Me. Me. The money I was making back in the day at Walgreens and at Quick Trip and at my real estate marketing company and at Einstein Bagels, right? And on YouTube, all this stuff. I'm investing for me and me only. So who's going to care about my money more than me? No one. So that's why I put in all this research work. I put in all this time and attention because I'm not investing other people's money. These hedge funds, these type of Wall Street folks, it's all funny money to them because it's not even really their money. It's other people's money they're investing. You think you're ever going to care about somebody else's money as much as you care about your money? Of course not. Of course not. And that's why, one of the big reasons why retail, sophisticated retail has been in the market many years is some of the most intelligent people you will ever meet in regards to understanding stocks in the market. It's incredible. But, if you just get billions and billions of dollars given to you from clients, where's your incentive? Your incentives to go play golf with the guy that's got a $250 million net worth and make sure you got a good relationship with him so he keeps, $50 million at your firm. That's where your incentive is. Not, is Nike stock a great buy right now or not?
He upgraded Nike to buy in late February, $115 price target. So you're a believer here in the story, even after some of the warnings last night that it would take a while.
Yeah, look, the upgrade a couple of weeks ago was not on the near term. It's not a quarterly call. It's on, you have the right sheriff, the right new CEO. You have a strategy that makes sense, fix the product, fix the distribution, and then you have time. So the stock was at a 10-year low from a price to sales perspective. Expectations are very low. Sentiment's very negative. We've gotten more of that today or last night. And we think this is a turnaround that'll take 2 years, but will show progress sooner than the market thinks.
And
100%. I'm in agreement of that. And listen, I listened to that Nike conference call last night. Let me be very clear. That conference call was a banger. The numbers are obviously, disappointing, depressing in the short term, right? As they work through inventory and, work on getting every single region in a great place for the long term, right? But in terms of their strategy on how they get there and explaining that strategy on what they're doing short term to line the company up for the next several years, dude, banger of a conference call. Like, phenomenal. Like, I walked away from that conference call feeling more confident than ever in my Nike investment, which is exactly why you saw me buying Nike shares across portfolios today, right? I can tell you, if I walked away from that conference call feeling uncertain about where their strategy's at, I wouldn't have been buying like I was buying here today, but I walked away feeling
how do you measure progress? Because last night I thought it was notable that North America only declined 4%, and overall sales came in better.
So, look, the company's taking more pain now for more gain later. With the numbers last night, the guidance wasn't all that great, right? What you saw was the company really fixing the inventory bloat, and that's going to take some time. So what they did was, let's get the inventory out the door quicker, and let's take our pain and our medicine now. That was reflected in the results. But what you're seeing under the covers is some improvement. So the performance product is working. The Vomero 18, the Pegasus Premium, that's starting to replace some of the issues they're seeing in the Classics franchise. And we think that'll power the stock ahead, not in the next quarter, but 2 to 3 quarters from now. I think you're going to see a lot of upside against very low expectations.
100%. I've been saying this. Back half of 2025, calendar year for Nike, start to look at those numbers. And then you're going to start to see, oh boy, like things are starting to come around here. And then by the time we get in 2026, and then they're going to be coming off of easy comps. And by that time, Nike's going to be loved. By the time we're talking 2026 and the numbers that are coming out in 2026, people are going to be falling over themselves to buy Nike stock again and be like, oh my gosh, Nike's bad.
Yeah, definitely low expectations. I hear you on the price to sales ratio, but the revenue for this fiscal year and next, it's basically equivalent to what they did in fiscal 21, 22. So it's almost like on a relative basis, it's a smaller business compared to everybody else. How are you gauging what is left in terms of Nike's competitiveness with those upstarts that have done relatively well in that interim period of time.
Yeah, it's great. But what's interesting about the stock is that the stock is also at the COVID low. So we're almost going back to where the stock was in 21, 22 when it was a smaller business. That's a great point by you. In terms of market share, what we're seeing is Nike gained market share during COVID and then lost it to these upstarts. These upstarts are starting to slow, at least Hoka is. On is still doing a good job, but what these companies don't have is what Nike has in massive distribution advantage globally. And they have Nike has a lifestyle business, and Nike owns your kids. So On and Hoka, for all they've done a great job, On doesn't have an apparel business of note. Hoka is already slowing. And we think that Nike will have the right guy to fix the product on both apparel and footwear, which will drive the results in a better place. So that's kind of what we're seeing. We're already starting to see evidence of improvement in the running area. Soon to be, when you take that improvement in running, combine it with some stabilization in classics, I think you get a business that kind of starts to take back off. And look, earnings have been cut in half. Margins have been cut in half. This can rebound fairly quickly.
100%. Yeah, they're making a great comeback in running. And, you know, as I explained many times in regards to Nike, you know, over the past 40 plus years, there's been countless companies that were like supposed to be the Nike killers and like, oh, there's stealing market share from Nike. And they always fail and they always fall. And Nike remains and they get bigger and bigger and they get through their storms. And that's exactly what I see playing out again, right? All the brands that have been hot the last few years slowly start to fade and Nike remains, right? And why is that? It's because the other ones they don't create lasting brands that can get through years and years and decades, right? Nike creates a lasting brand. And they do that through their athletes, right? They also do it through product and they do it through marketing. And so the other brands never invest enough into their brand to get them through decade, right? And so they end up just becoming fads. That's what all the other brands end up doing. They kind of end up becoming fads because they aren't willing to invest that sort of money that Nike is. Like Nike's revenue is down right now, right? And yet their demand creation expense is up. That's what we call investing for the long term. Because Nike is not just playing the game for this year. If all Nike cared about was what the quarterly results were, you'd see demand creation expense down massively for the company. But they're willing to reinvest in the business because they're playing a game over the next 5, 10, 15 years, right? And other companies are not willing to do that. All right, next one up.
On the conference call last night, talking about demand headwinds for the company, I spoke to him also, Mike, and we talked about the fact that there are some signs of progress under brand new CEO Elliott Hill's so-called win now strategy, the strategic priority, which he says is proof that what they're doing is working. It's just going to take time. And the question is time, right? And how long is Wall Street going to give?
Yeah, and Nike in the recent quarter did, what was it, $11 billion plus of revenue? And this is bad times for them, by the way. $11 billion? A company like that is, you know, when you're trying to reset inventory, when you're trying to get the product right, all those sorts of things, distribution, it doesn't just happen overnight. It takes time to play out there. So anybody that thinks like, you know, this just happens in a day, like, no. The bottom line is you want to see progress quarter after quarter after quarter, and that's exactly what I'm seeing, and we'll start to see the numbers bounce back in the back half of this year.
Because on the call, I think what turned the stock is that they said double-digit declines for sales in the fourth quarter, which is worse than what they're seeing. So it's going to get worse before it gets better, kind of thing.
So everyone kind of eager to play the turn, but it's coming from lower levels of top line. And so I think that's the adjustment the market is trying to figure out.
And questions about when. So here to discuss is Piper Sandler analyst Anna Andrea. She has a $90 price target buy rating on the stock. Anna, do you have faith after last night's call and results, even with the stock selling off today?
Good morning, and thanks for having me. Great to be here. So it's difficult to, get really excited about owning anything in consumer right now in this tape and with the tariff exposure. We completely get that. But we're actually walking away, pretty constructive on everything that Nike is doing right now. There are definitely some green shoots with innovation. This is the most bullish they've sounded about innovation on a number of things, really in a few quarters. And we think Elliott Hill is doing the right things for the business. They're rationalizing the franchises. They've talked about that, and basically choosing the near-term pain for some longer-term gain, which we think is right.
How long, though, is the question?
Yeah, no, great question. And as you said, time is of essence right now. Speaking to management last night, they actually were saying on the call and offline that their view on the fourth quarter has not changed versus 90 days ago. They said 4Q top line will be worse. They're stepping up this rationalization. So that's part of that. So that's exactly what they guided to. But we still think, as we go through fiscal 26, numbers have now been reset. Sell side has come down, quite a bit for next year. We think you will get some recovery in the business in the back half, and it's going to be a gross margin first type of recovery and sales later. But you're definitely seeing green shoots.
And 100%. And the thing you got to understand about Nike is when the revenue starts to bounce back, which I believe will start to bounce back in the back half of this calendar year, right? When that revenue starts to bounce back because of how low they've gotten the cost of running the business, you're going to see the earnings per share skyrocket. We're not talking like a little bit. No. You're going to see it skyrocket, even off of only a few percentage of revenue growth. Oh my gosh. Now, the bearishness on the consumer, I'm actually not bearish on the consumer. This is GSG. This is commodity index over the past year. GSG is up 2%. I don't think that the consumer is going to have to deal with inflation at all in any substantial way for at least the next year or two, right? Tariffs, we'll see what happens with all that. That's a drama show that no one knows how that's going to play out. But the moral of the story is here, commodities are dead. And if commodities are dead, it's hard to get inflation. Additionally, you have worries about real estate, all this stuff. That hurts rent prices. That hurts housing. You're going to have interest rates likely coming down continually over the next year, right? Which makes it better if you're going to take out a car loan or a home loan. Just a lot of things get a lot cheaper. And so a lot of people are bearish on the consumer over the next year or two. I'm not. Even if we saw unemployment go up to, let's say, 5 or 5.5% or something like that, right? I'm not bearish on the consumer. I actually like where the consumer is at for the next couple of years here. So, I mean, we'll see how it all plays out. But I think the everyday man is actually going to be looking much better over the next couple of years than they looked over the past few years. That's my opinion. We'll see.
With the full order book, they talked about that, and we think it's going to get better as we get through holiday.
Okay, what is he doing? What is he doing to turn around the innovation, culture, sales? These were all problems, right, under the last CEO, and that's people have come to realize that, both investors and the company, and I think Elliott Hill too. But what is he doing to turn it around that gives you confidence?
Yeah, no, I think, starting with the culture, and you said this, he's a long-term Nike veteran. From what we've heard about the culture, folks at the campus are most energized that they have been in a while. So I think with the culture, he's making the right steps. In terms of, the pivot back into wholesale, ever since he joined in October, he's been working on their relationships in the wholesale with the partners, really in the U.S. and globally, and that's starting, to show now. I think also importantly, they've been able to accelerate their rollout of some of the newness. Pegasus Premium is a pretty well priced, $210 premium price point type of a shoe that they've been able to bring to the market a year sooner than initially planned. We think that's pretty impressive. This is an industry with long lead times, and again, infusing more and more innovation. They talked about the Air Max DN8 that's resonating now. There are interesting things in apparel, 24/7 line. They talked about their scaling production for that. I think also in apparel, worth mentioning, you're going to get the Skims partnership coming out that we think is going to be really interesting, and just working through the rationalization of those classics, I think is really important. And by the end of fiscal 26, I think a lot of that inventory is going to be out of the market.
All right, Anna, thank you very much for joining us with the bull case on Nike.
Yeah,
Andrea.
Listen to the conference call. Go to 1000xstocks.com. Listen to the conference call. Elliott Hill laid out the whole plan. It is, if you care anything about Nike, listen to the conference call. He lays it all out in detail, in a phenomenal manner about everything they're doing, everything they're up to. He could have not communicated more clearly. It was perfection, right? Another comment I saw recently was somebody was like, oh, they're partnering with Kim Kardashian on that Skims. Like, isn't that show weakness for Nike? I'm like, are you kidding me? Like, Skims is a very hot brand, one. Two, Kim Kardashian is one of the most famous people in the world, and hundreds of millions of people love her. I think it's very wise partnership on the part of Nike to get a hot brand like that, and one of the most famous people in the world, and like I said, hundreds of millions of people love that woman. And so I'm like, if you could partnership with her, and that whole Kardashian family, everything they touch turns to gold. It's incredible. I'm like, that doesn't show me a position of weakness. That shows me a position of strength. And it's also great. It's also great for Kim Kardashian to be partnering with Nike as well. It's a win-win for both sides. Like, she's going to probably become even more of a multi-billionaire after all that. So the moral of the story is, man, listen to that conference call. Banger. So we'll see how it all plays out. I think it's going to play out very well. Okay. Appreciate y'all joining me as always. Thank you so much for being here. Thank you for joining me here today. If you're looking to apply, join my private stock group, private wealth group, get access to 1000xstocks.com. Pin comment down there, click on that, fill out a form, see if we can get you access to that next week. Much love and have a great day.